Send material stock.
Yeah, stock, right?
Right.
Yeah, stock. Okay, let's just give you one idea. Okay, let's go back to here. Keep this in your mind. Okay, when we talk about balance sheet, always keep that in your mind. Assets A equal to liability L plus equity E. So to simplify, A equal to L plus E. This is it. All right. Just as simple as it is. So at least right now for today, the class 1, you learn one thing. Keep this in your mind for your whole life. This will not change. This equation will not change. Doesn't matter. GAAP may change, okay? GAAP may totally change sometime. But this equation will not change. When we talk about balance sheet, always in your mind, just pop out in your mind. A equal to L plus E. Always, all the time. Unless you have done something wrong in your calculation. Right? So here you see, give you one idea, what kind of example could be assets. The number one is always cash. Always cash. Alright? So for example, Mr. A start to run his own business, start out the new business. And Mr. A just transfer $10,000 cash from his personal account to business account. And we will talk about next semester how to start out the business, how to organize either corporation or limited liability company, LLC, or just simply run as a sole proprietorship. Say Mr. A business or Mr. A and associate, something like that. We'll talk about how to organize a new business next semester. But right now we're just assuming Mr. A already formed a corporation. Alright? So when Mr. A transferred his personal money, $10,000 cash, from personal account to corporate account, what do you see? If you are the accounting, assuming you are the accounting people, or you are Mr. or Mrs. A, what happened for your business?
Assets increase.
Yes, assets, or we say cash increase. We're gonna talk about that. How to enter this transaction in the accounting book. We'll talk about that. Probably today, if not today, next week. Right? So one thing happened, you can see the corporate account cash increased from 0 to $10,000, right? What else? Let me give you one hint, okay? We'll talk about that. For the accounting world, for each transaction, okay, when we say transaction means something happened. Okay, when we say transaction, not really trading, okay? In the accounting world, when we say transaction, it's not sales or purchase, okay? When we say transaction means something happened which gonna affect your accounting. Okay, this is called transaction, right? So in the accounting world, for each transaction, for each event happen, it must be at least 2 entry. Must be 2 entry, must be 2 recording. So we have one recording that's cash increase from 0 to 10,000. And can you imagine what could be the other entry?
Is that equity or?
Yeah, it's equity. It's equity. Think about this. For the whole semester, even though most of you even never learned accounting, accounting is not that. It's not really the mystery. Okay? It's common sense. Accounting basically is common sense. Okay. When we talk about the balance sheet, right? You only think about 3 things: assets, liability, equity. Never mix up revenue to your balance sheet, because I think there's a very common error for the people start to learn accounting. Never mix up another two factors, that is revenue and expenses. All right. So throughout the whole semester, throughout these 6 weeks, we only focus on 5 items: assets, liability, equity. Those 3 items under balance sheet. The other 2, revenue, expenses, always related to income statement. So far so good? So far so good? I think so far the concept is very straightforward. Accounting could be very complex. If some of you, eventually some of my former students, they are totally from high-tech area. However, few years down the road, they pass CPA exam. They become CPA. Why not? Keep CPA as your side job. You're an engineer and then you just want to help people to solve the problem they never know, right? CPA is the person trying to help people to solve the problem, all right?